Welcome to Monday's Market Outlook. Matthew Buckley, the Chief Investment Strategist here at Wealth Creation Investing, and the Bloodbath continues. The bloodletting continued Sunday night, Monday morning, with the Shanghai imploding, the Nikkei imploding, and obviously that's going to drag us down as well. Folks, we're kind of in a global death spiral. Right? The Bank of Japan Fed kind of fired the first shot about 3 weeks ago. The U.S. Fed fired their shot last week. Central bankers trying to more or less slowly pull the punch bowl away from a bunch of market drunks, and the drunks are rioting. The markets are going through an absolute temper tantrum, and nothing is getting spared. Housing stocks are turning to bear market territory. Why do I bring this up? Well, all these quote-unquote 500-pound heads in the past year have been saying, oh, housing's turning around, and housing is what's going to pull us out of this economic malaise that we're wandering through. And I said they were wrong back then. I've been saying they were wrong in the middle of the year, and I say they're wrong now, and it's confirmed. Housing is in a bear market right now. The U.S. economy, no matter what the Bernac's going to tell you, is hurting, which is absolutely incredible to somebody on Main Street, right? The stock market's been going straight up, and the economy sucks? Exactly. That's because, as I said, the Bernac has created this liquidity hopium, I call it, that the market, once you take it away, is going to absolutely go crazy. Nothing is safe right now, and we'll talk about stuff that is safe and how I'm collecting some nice scratch as the market goes down, but damage so far. I mean, and this is what I'm talking about, guys. There's the S&P index, and then this is more or less macroeconomic data. So as the S&P's been rising, economic data in the United States have not been good at all. The Nikkei's imploding. The Shanghai's imploding. European stocks are imploding. Greek stocks, yawn. But everything is more or less imploding. Obviously, the only thing that's catching a little bit of a bid is the U.S. dollar. Gold's imploding. You name it, it's imploding. Even the mighty old Apple has fallen below $400 for the first time in a couple months, and look out below. But take a look at this, folks. Put a trade on. I believe it was Friday afternoon. So let's say in 4 hours, this trade's made 340%. About $1,400. It was a bullish, or is a bullish double vertical on SDS. Now, if you don't know what SDS is, it's the ProShares Ultra Short S&P 500. So as the market goes down, this goes up. As the market goes up, this goes down. And if you don't believe me, let me just overlay the S&P on top of the SDS. As you can see, it's kind of here's the mirror line, right? There's 0%. As the S&P goes up 6%, the SDS goes down 12%, and vice versa. As the market's been imploding here, and going down, the SDS has been going up. So this is a pretty good hedge, or a good counter trade to what's going on in the market. And as you can see, let's just say the past 6 months, as the market's melted and ground higher, the SDS has imploded. Well, guess what? It's catching a bit of a bid now, and put this trade on Friday, and like I said, Friday afternoon, it's up $1,500, or nearly 340%. Bullish double vertical. Okay, what is a double vertical? Let me show you the trade here. Let me just break open the trade so you can see it. A double vertical is simply two similar strategic mindset trades on top of each other. In this case, bullish that the SDS is going to go up, meaning the market's going to go down. So I sold 30 July 40 puts on the SDS, and in case the market had a rip your face off rally, which I knew it wasn't going to do, I bought 30 July 38 puts as a hedge in case the SDS imploded. Obviously hasn't happened. It's exploded. And then, since that's a bull put spread or a credit spread, I took in a little bit of scratch to do it. I turned around and used some of that scratch and bought a bull call spread. Bought 30 of the July 43 calls and sold 30 of the July 45 calls. And you can see the P&L diagram right here. Max potential loss about $5,600. Right? And that's obviously if the SDS just absolutely imploded down to 32. Not going to happen. Max potential profit up here at $6,400, but that's obviously all the way up here if the SDS really imploded. More realistic, there's a break even at least. If the SDS stays above 39.86, By July expiration, there's a 77% probability of at least making some scratch. Love this thrust to weight ratio, 1 to 1.5, right? So here, as I brief my Top Gun options traders when I put this trade on, here's more kind of a realistic profit target. I think the SDS could see the upper 40s before July expiration. That would be a profit of about $4,500, right? So that would be my profit target, about $4,500 on this trade. Even if I get a nice spike up here, to 46, which is realistic, and $3,500 profit, I might close half the position and let the other 15 contracts ride, right? My eject criteria on this is if the SDS implodes down to about $39.67, that's a loss of $2,000, I'd look at getting out of this trade. So place this trade in the model portfolio, primary trade alert model portfolio, and it's looking great, up $1,400 alone today. Okay, and this is what your portfolio should look like on a day like today. Now, obviously, I had a lot of positions expire on Friday, and I'm kind of sitting on my hands for a little bit today, trying to see exactly where we're going to go. But this is how your portfolio should look on a day like today. When the market's down 220 points, the Dow, and the SPUs are off nearly 30, I got some pinks and a solid green. This is a nice-looking hedge portfolio that's up about $600 today on, what's that, about $17,000 in haircut. Okay, so nice gain today. Having a portfolio that goes kind of up, or a nice steady up as the market whipsaws all over the place, puts a smile on my face. If your portfolio is completely red today or completely green, you're doing it wrong. Trust me, you're doing it wrong. Okay, so it's going to be a very interesting week, folks. I'm going to do a nice, big, long primary live trade brief tomorrow morning at 0900 over at Top Gun Options to make sure my traders know what's going on, what my strategic mindset is, and how I'm staying safe in this very, very volatile environment, folks. The market's going through a temper tantrum. Don't know when it's going to end, but I really don't care. As an options trader, I love this. I love temper tantrums because it does what? Increases volatility. As options traders, we love increased. This is like shooting fish in a barrel in this type of environment, folks. A lot of your neighbors and friends might hate this type of environment, but if you trade options, this is a target-rich environment because we love volatility. It juices up the premiums, and you can see potentially outsized returns. You can also get your rear end handed to you pretty quick if you don't know what you're doing. So if you want to know how to potentially trade a market environment like this, go to topgunoptions.com, hover over services, and click on that first drop down there, alerts/live trade briefing, or you can go to topgunoptions.com/TA-LTB and come and take a test flight, folks. You can trade with me for 2 weeks in primary with our live trading or just our normal trade alert service right there by clicking on that big box. Or you can, if you kind of are a Jedi Master and know what you're doing, come to our intermediate/advanced service right there. Click on that big box. Or you can do what most traders do when they join Top Gun Options. They do both. Right? They do primary with me, and then intermediate advanced with Doug Robertson, our volatility arbitrage trader, by clicking on this big square right here. Okay? So, folks, if you're going to trade this market solo, God bless you. You're going to need it because it's nuts. But stay safe, okay? Happy hunting, but make sure you hedge. Okay, somebody's yelled fire, and it's starting to get a little bit of a stampede towards the door. If you're not ready for this, you're going to get shellacked. I remember, what was it, a month, 2 months ago, Wall Street Journal said, hey, here comes the retail trader. And the emails that were flying around out of Wall Street are hysterical. Here comes the retail trader. Every time that's happened in my experience in over 2 decades of trading options, once the financial media come out with that type of headline, you know it's ending. That's when you get ready to jump in the pool. That's about the time Wall Street pulls the plug, takes their money, and heads to the Hamptons for the summer, and you break your neck in the pool. Don't let that happen to you, okay? TopGunOptions.com/TA-LTB. All right, I'll talk to you guys later in the week. We'll see you.